So you're thinking of making a move to the greater Boise, Idaho area, but you have no idea what's happening right here in our real estate markets. Well, I'm glad you're here. Welcome to Mikey's Monthly Market Updates. My name is Mike Petras with NPRE Residential, and in this video, we'll bring you the latest insights and updates from real estate trends happening right here in the Treasure Valley. So if you're looking to stay ahead of the curve in our ever-evolving market and are looking for the information you need to make the best informed decisions on buying, selling, or investing, stick around to this video and get in the know. So make sure to hit that subscribe button below, turn on the notifications so you never miss an update in the future, and let's get started. But before we do, if you'd like to begin your home search in more real time than websites like Zillow, Realtor.com, please visit www.mpre.homes and sign up for your personalized home search today. And no worries, I won't spam you. And if you're looking to sell and want an idea of what your home is worth in today's market, also visit my website, click on the Home Evaluation tab in the upper right-hand corner, and obtain it. You most likely will hear from me, but again, I pride myself on being a non-pressure real estate agent. If at all, I'd simply like to call, introduce myself, and let you know how I can be of service when you're ready. So let's get to the information and start off with Ada County like we normally do. And as we can see by this slide, the median home sold price on a county level rose this month. As we can see by the graph, we're sitting at a median home sold price of $529,990, which is up 0.94% from the $525 we had the previous month. In comparison, this is down 1.85% from our mark of $540,000 in January of 2022, down 12% since the peak home value of $602,250 in late May, early June of 2022, the beginning of the market correction, but has made gains of 8.01% since the beginning of the correction in January of 2023, where we're sitting at $487,495. And since the beginning of this year, Ada County is up 2.83% since the $514,975 that we can see in green. Not a bad gain on a county level for Ada County. Looking at the 6-month breakdown and in comparison to last month, Ada County overall is still on a declining trend, but not a very harsh one. Up 0.94% since last month alone, but over the last 6 months, down 2.75%. Overall, and since the end of the market correction in January of 2023, the real estate markets in Ada County have been chipping away at the losses incurred during the market correction. However, and as per my predictions in previous monthly market updates, we have been on a downward trend. But why is that? Well, stick around to the end of this video to find out why. But before we go any further, this information is on a county level. As we should know, real estate is more localized, so the value of your specific home may obviously vary from this data. This information is provided to show how the Ada County market trends are performing overall. This is the information that us realtors should be highly in tune with. And of course, if you have any more specific questions about your area, please feel free to reach out to me. But if you are looking to sell and want an idea of what your home is worth in today's market, please visit my website, click on the Home Evaluation tab in the upper right-hand corner, and obtain it. Again, you most likely will hear from me, but again, I pride myself on being a non-pressure real estate agent. If at all, I'd simply like to introduce myself in the phone call and let you know how I can be of service when you're ready. But back to the data, looking at inventory versus buyer's demand. Inventory is beginning to make a drastic turn downwards, sitting at 1,312 homes available for sale, with 673 selling in the month of November. This is seating us at 1.94 months worth of inventory, which is rapidly down over the last few months. But what about the buyer's demand? As we can see by this graph, it's also on a decline, indicated by the pending line in orange. However, the gap between inventory and buyer's demand is rapidly shrinking. To know more how this will affect you as a buyer or seller, please stick around to the end of this video. Breaking the inventory levels down by category, we can see that existing homes have 573 homes available for sale, with 398 selling in the month of November, placing us at 1.43 months worth of inventory. This is significantly down from the 1.83 months worth of inventory we had in November. But as we can also see, the pending line in orange indicating buyer's demand is also down. But what about new construction? Inventory is finally on the way down. Although this is most likely due to the winter months, which typically reduce building, is it because they have also realized that they have overbuilt? Currently, new construction is sitting at 793 homes available for sale in Ada County, with 275 selling in the month of December. But again, buyer's demand is also on the way down, indicated by the pending line in orange. So how does all this inventory information translate into values in both existing and new construction homes. Let's take a look. Looking at this month in existing homes, we can see that the median home sold price dipped to $520,000. This is down 2.62% since last month. However, since the end of the market correction in January of 2023, existing home median home sold price has gained 8.65%. Since January 2022 has also gained 0.94%. But however, since the beginning of the market correction back in late May, early June of 2022, existing homes are still down 11.37%. And since the beginning of this year is up 4.13%, which is not a bad gain for existing homes in Ada County. But what about new construction? New construction this month made a rise, gaining 3.73% since last month. However, new construction is still down 9.16% from the 588,945 in January of 2022, down a whopping 22.46% since the top of the market in orange, but has slowly chipped away from the market correction low of 494,900 at a rate of 7.49% in gains since that mark, which was the beginning of 2023. And since the beginning of this year, made a meager gain of 0.93%. But how about the health of the real estate market in Ada County? Again, as usual, this is determined by two things: the days on market and the cancels and expireds. Looking at the days on market, we had another rise, and a significant one this month. Given that we are in slow season historically, we are hitting 49 days on market, and seeing a continued rise in this trend is to be expected. When discussing the health, though, the key to watch out for in the level of days on market is when the days on market hit high levels like we saw in January of 2023. This means that the seller's market is struggling. When this happens, we can anticipate prices to come barreling down, which they did. When they crash to low days on market, we can anticipate the opposite: sellers having a massive advantage over the buyers, which they also did. Looking at today's trends and back to 2019, we can see that we're basically out of balance. So, have our markets return to normal in Ada County? Stick around to the end of this video where we'll go ahead and discuss just that. How about the cancels and expireds? While expireds are generally those holdout sellers that want their price and refuse a price reduction until the end of their contract, cancels are generally more the trend that we should be looking at. A rise in the cancels can mean a few things. It can mean that sellers are getting cold feet and pulling their homes off the market. It can mean that buyers weren't getting the interest rate that they were looking for and fell out of contract, which led to a subsequent cancellation. Or in this case, it's probably because of seasonal swings. Sellers know, just like real estate agents, that the market's cool during Q4. Santa also came, as did the new year. So given cancellations have slowed the previous month, they are still high. This indicates to me a mix of the both. Sellers were probably getting cold feet due to the market conditions and the holidays, and since interest rates have went back up, buyers could also have contributed as well. Regardless, I'd anticipate these numbers to start declining in the upcoming months, but this will depend on a number of factors, all of which we'll discuss at the end of this video. However, overall, by the days on market and the cancels and expireds, the overall health of the real estate market in Ada County is looking okay. Nothing again seems to be super alarming by the data. All right, Canyon County, it's your turn. And as we can see by this slide, the median home sold price on the county level dipped again this month. We're sitting at a median home sold price of $409,000. This is down 1.44% from the $414,995 we had the previous month. And in comparison, this is also down 3.74% from our mark of $424,900 that we had in January of 2022. It's also down 14.16% since the peak home value of $476,500 in late May, early June of 2022, the beginning of the market correction, but has also made gains of 3.31% since the end of the market correction in January of 2023, where we're sitting at $395,445. And since the beginning of this year, Canyon County is currently up 2.2% since the $399,990 we can see in green. Looking at the 6-month breakdown, the bouncing trend we have been seeing in the median home sold price may be officially over, as we have been seeing a consistent decline over the last few months. Will this continue to be the case for Canyon County? Please stick around to the end of this video to find out more. Overall, and since the end of the market correction in January of 2023, the real estate markets in Canyon County have been chipping away at the losses incurred since the market correction. But again, before we go any further, and it's the same with Ada County, this information is on a county capture. As we should know, real estate is more localized, so the value of your specific home will obviously vary from this data. This information is provided to show you how Canyon County market trends are performing. This is information that us realtors should be highly in tune with. Of course, if you have any more specific questions about your area, please feel free to reach out to me. But if you are looking to sell and want an idea of what your home is worth in today's market, please visit my website, click on the Home Evaluation tab in the upper right-hand corner, and obtain it. You most likely will hear from me, but again, I pride myself on being a non-pressure real estate agent. If at all, I'd simply like to introduce myself in the phone call and let you know how I can be of service when you're ready. But back to the data, looking at inventory versus buyer's demand, inventory is continuing to make another drastic turn downwards, sitting at 915 homes available for sale, with 369 selling in the month of December, seating us at 2.47 months worth of inventory. But what about the buyer's demand? As we can see by this graph, we're also seeing its decline, indicated by the pending line in orange. But it's not dipping as rapidly as the inventory. So Mike, why is the inventory declining and why is the buyer's demand following suit? If I'm thinking of buying or selling, what does this mean and what can I expect? Well, great question. Please stick around to the best strategy section at the end of this video where I'll go ahead and discuss just that. Breaking the inventory levels and the buyer's demand down by category, we can see that existing homes have 401 homes available for sale, with 182 selling in the month of December, placing us at 2.2 months worth of inventory. This is also down from the 2.28 months worth of inventory we had the previous month. And as we can also see, the pending line in orange indicates the buyer's demand is also down. But what about new construction? Inventory for the second straight month in a row is on the way down. No way. But the buyer's demand has also made a turn for the worse. Well, Mike, why is this happening? Well, again, stick around to the end of this video. Currently, new construction is sitting at 514 homes available for sale in Canyon County, with 187 selling in the month of December. How does this inventory information translate to new home values in existing homes and new construction? Well, looking at this month in existing homes, we can see that the median home sold price dipped to $380,000. This is down 3.79% since last month and is now also down 1.30% since the beginning of 2024 in green. Since January of 2022, Canyon County has also lost 2.56%. And of course, since the beginning of the market correction back in late May, early June of 2022, existing homes are still down 10.58%. However, since the end of the market correction in January of 2023, existing home median home sold price has gained 10.78%. So in the long run, as is the case of real estate, Canyon County has made gains, slowly chipping away at the losses occurred during the market correction. But what about new construction? New construction this month made a gain, but a significant one? Well, yeah, you can say so, up 2.15% since last month. However, new construction is still down 5.48% from the 465 in January of 2022, down 19.94% since the top of the market in orange, but has chipped away from the market correction low of 405,859 at a rate of 7.65% in gains since that mark, beginning of 2023, and since the beginning of this year, up 2.15%. Not bad for new construction in 2024. Well, how about the health of the real estate markets in Canyon County? Well, that's determined again by two things: the days on market and the cancels and expireds. Looking at the days on market, we had two rises in a row. Given that we're in slow season historically, this is to be expected, hitting 55 days on market. When discussing the health, the key to watch out here for is levels on the days on market. For example, when the days on market hit highs like we saw in January of 2023, this means that the seller's market is struggling. When this happens, we can anticipate prices to come barreling down, which they did. When the days on market crash down to low days on market, we can anticipate the opposite: sellers having massive advantages over buyers, which they also did. Looking at today's trends and back to 2019, we can basically see that we're at a balance. So have our markets returned to normal in Canyon County? Well, stick around to the end of this video where we'll go ahead and discuss just that. How about the cancels and expireds? While expireds are generally those holdout sellers that want their price and refuse a price reduction until the end of their contract, cancels are generally more the trend that we should be looking at. A rise in cancels can mean a few things. It can mean that sellers are getting cold feet and pulling their homes off the market. It can mean that buyers couldn't get the interest rate that they were looking at and fell out of contract, which led to a subsequent seller cancellation. Or in this case, is probably because of the seasonal swings. Sellers know, just like real estate agents, that the market's cooled down in quarter four. Santa came and went, as did the new year. So given the cancellations have slowed the previous month, they are still high. This indicates to me a mix of the both. Sellers were probably getting cold feet due to financial market conditions and the holidays. And since interest rates went back up, buyers could have contributed to this as well. Regardless, I'd anticipate these numbers to continue declining in the upcoming months, but this will depend on a number of factors, all of which we'll discuss at the end of this video. Overall, however, by the days on market and the cancels and expires, the overall health of the real estate markets in Canyon County is looking okay. Nothing super alarming, again, appears to be shown by the data. So you made it to the end of this video. Awesome. You may probably be screaming at me saying, it's about time, Mike. Well, I feel you. It is. Well, let's break all of this down. If you're looking to buy or sell or invest right here in the greater Boise, Idaho area, better known as the Treasure Valley, what is the data showing us, and is this a good time to make any moves? No pun intended. Buyers, let's start with you. The biggest thing that you may have to deal with this month going forward is going to be mortgage interest rates. They're high, I get it, it sucks, but it's just the way that it is. Higher mortgage interest rates coupled with the historical seasonal swings is why we are seeing the inventory fall dramatically, along with the buyer's demand. However, inventory supply is dipping harder than the buyer's demand in most cases, as we saw by our graphs. I expect over the next month or so for the inventory levels to narrow to the buyer's demand. When this happens, you can expect the housing prices to stabilize or even begin to rise in Ada and Canyon County. But also expect your negotiation powers with the seller to become harder when this happens, not beneficial as they are today. And why? Because real estate is valued much like everything else, by supply and demand. However, I do expect inventory decreases to be potentially short-lived. And why do I say this? It's because it's no big mystery that the unemployment levels in the U.S. are exacerbated. I don't believe them. I don't believe the Bureau of Labor Statistics. I believe they've been putting on a scam. And yes, the BLS is a federally run agency. For example, if we take a look at the delinquency rates of mortgages on 30, 60, and even 90-day delinquencies, we can see that they're on the rise. To me, this indicates an unemployment problem. However, unlike 2008, the underwater homeowners have equity in their homes, and they're able to successfully sell. This is why we're seeing new foreclosure filings are not on the increase. With all this being said, I expect unemployment, when the true numbers actually hit, to trigger a panic and a possible sell-off of all assets, not just housing. This will exacerbate unemployment, especially as businesses lose money. And businesses can also lose money in the stock market. And if we take a look at the PE ratios, we can see that they're overbought and overvalued across all major 3 indexes. I believe this will add to the housing inventory across the U.S. and here at home in the Treasure Valley. And to compound the issue, it's no big mystery by the data over 2024 that existing sellers want to sell. They want out for a variety of reasons, but mostly because of lifestyle changes. And regardless of where the mortgage interest rates are at, now, do I believe inventory will see a dramatic rise like we saw in 2007 due to a drove of mortgage defaults? No, I do not. Nowhere near it. However, I do expect a rise in inventory as compared to what we saw last year. But this depends on one big factor, the new incoming administration. Should the new administration turn on American independent energy, which I think they can and quickly, and successfully pull off fair tariffs and lower taxes on businesses as well as the American people, I see everything that I just said regarding unemployment to possibly subside. If this happens and quickly, things in the U.S. could stabilize and improve. So in my honest opinion, if businesses can get some relief from energy costs, inflation, and taxes, well, we're at a wash. Will tariffs and placing more money in the American economy raise inflation? Sure, but not like an extreme swing in supply and demand like the pandemic brought on. And if these policies can help offset inflation and unemployment, well, again, it speaks for itself. I'll go through my predictions for 2025 in another video, so please hit the subscribe button below, hit the notification bell so that you stay in tune with the videos that I do come up with. So, considering what I just said, there will be some uncertainty leading into 2025 for sure, and we'll just have to wait and see how quickly economic problems can get tackled. It's also rumored that Trump will declare an economic emergency the moment he takes office, so hang tight. As for now, though, and according to the data I currently have available, expect inventory, especially during Q2, to rise. I feel that sellers will still want to sell regardless of mortgage interest rates, like they did this year. But what about the builders? Well, they may hold off. I think they've learned from this year and they may just retreat back to doing pre-solds. This will prevent an inventory increase to the builders, which will maintain their home prices. If the builders keep pace with buyers' demand, I wouldn't expect home prices to necessarily drop. This would depend on unemployment and existing homeowners trying to sell. So what is keeping the housing industry from normalization? Again, it's mortgage interest rates. And at the time of making this video, mortgage interest rates were heading back into the low 7s. So they're heading back up. And why is this happening? Because economists have their sights laser focused on unemployment in the U.S. To compound this, the Fed is only slated to make 2 rate cuts in the federal funds rate in 2025, according to their most recent SEP. So because of this, should we expect dramatically lower mortgage interest rates in 2025? So since the federal funds rate doesn't control mortgage interest rates solely, this would depend on 2 things. Again, unemployment in the U.S. and the new incoming administration. So while I'd like to give you a solid 100% yes that we'll see a reduction in mortgage interest rates, the new administration is only a week and a half away, and I'm more optimistic than pessimistic for a better than usual 2025. But as long as we see mortgage interest rates remain high, we can also expect buyers to remain or be priced out of the real estate markets. And sellers will hold on to their asset, which is their mortgage, especially if they're holding onto a mortgage within the 2 to 4% range. As a buyer, though, you should know that Americans are hungry to own their piece of the American dream. If you're a buyer, this is what you need to pay attention to. The last and only mortgage interest rate dump, which occurred just before the Fed made their first rate cut, showed what Americans are willing to accept as an acceptable mortgage interest rate from here on out. And that rate is within the 5s. With the Fed in a state of quantitative tightening, do not expect those rates to come back into the 3 or 4s. Those days are over for some time. However, they are currently possible to obtain. We'll discuss that in just a minute. But to solidify the point, when the rates did crack into the low 6s or even high 5s, is when the majority of Americans came out to buy. Some analysts are predicting rates could be back in the 5s by as early as Q2 of 2025, but again, I have my doubts. Also, if the inventory doesn't increase and there is an increase in the buyer's demand, then expect home prices to dramatically rise. However, buyers, there are a lot of sellers that want to get out of their homes where they're at, evident in the inventory swings that we have been recently seeing. So we'll just have to wait and see how it works out. These examples are my future predictions if you're not quite ready and you're still on the fence due to the current state of mortgage interest rates. However, remember, your competition will come out of the woodworks as the rates lower. This, if you're a buyer, will most likely be detrimental for you when it happens. So it's imperative that you have a realtor such as myself with market knowledge and statistics in your corner. Now, what about those of you that are ready right now? Well, this is not a bad time to buy, regardless of the mortgage interest rates. Mike, why do you say that? Are you serious? That's just some real jargon to me to get me to buy. Well, is it? I've got 2 main reasons to justify my argument. One is that home prices are on the decline currently, but not for long, as inventory is drying up, as we can see by the data. If inventory dries up to buyers' demand, prices will stabilize and your negotiation power in your transaction will be lost, swinging back into the seller's direction. Little competition in the market means that sellers can stand their ground more on price and concessions. And right now, the inventory still outpaces the buyer's demand, but that is reducing quickly. Second, new construction and even some existing home sellers are offering concessions. This can be used to buy down your mortgage interest rate. It could also be used to pay off closing costs, etc. In fact, if you are looking to buy, now is when I'd recommend. To reiterate, there's still more competition for sellers than there are for buyers. This means negotiation power and home price concessions, etc. are available. And again, as previously mentioned, these concessions, if obtained, can go to buy down your mortgage interest rate. So low home price, lower mortgage interest rate due to concessions. What else could you ask for? It's better than more competition due to more buyers in the real estate pool due to low mortgage interest rates. The more buyers, the more you lose your negotiation edge. The choice is up to you. Okay, Mike, you convinced me. I want to buy now as opposed to waiting. Well, what is a better deal, existing homes or new construction? Great question. First, which category is taking the biggest hits in overall and median home sold price since the market correction? Well, that would be new construction. Second, new home builders are still offering concessions to sell their product. They have more of it. So more negotiation power along with concessions makes a new home more attractive. Plus, it's a new home. That speaks for itself. And while you might now be saying time to rush off to the builder and get a deal, pump the brakes. Remember that working with the builder or seller directly has a huge disadvantage, and that is, who does the builder's agents work for? Who do their agents represent? That's right, the builder or the seller. While they may entice you to work directly with them, an experienced agent like myself represents you and your best interest versus the builder. So whether it be me, my team, or another agent you find on YouTube, always hire an independent agent to represent your best interest versus the builder or seller. Do not fill out anything with a builder until you have considered independent professional representation thoroughly. You could place your real estate agent in a rough spot otherwise. But Mike, I want to buy an existing home. Can I still get a deal there? Well, of course you can. However, the transparency is different. The same trends do exist though. Still a significant gap between supply and demand, and home prices have been coming down due to such. Given this, smart sellers should also, in order to compete with the builders, be offering concessions, or at least have thoughts of them if they come up in a buyer's offer. The reality, though, is that not a lot of existing home sellers are offering concessions like the builders would, or can, or even be transparent about them. Even some sellers, due to the NAR settlement, are also refusing to contribute a co-op offering to the buyer's broker. This could mean that you, the buyer, would be on the hook for the cost of your professional representation for your agent. Affordability also depends on the negotiations you made with your agent at the buyer's representation agreement meeting. So it can be more of a gamble in the existing home market as compared to the builders, whom seem to have pre-circumvented the new DOJ Commission transparency rules. A smart business move, if you ask me, as to where now, unfortunately, existing home sellers have their hands tied due to the DOJ. Unfair if you ask me, but hey, it's the way things are now. Also, with the price drops existing homeowners are taking due to the current market conditions, they are generally more apt to be tougher in negotiations for concessions, or even for further price negotiations, hence the overall rise in expireds and cancels that we have seen. But this is also where an experienced agent like myself comes into play, knowing the pain points of the seller in order to obtain wins for my buyers. So thinking of working directly with the seller to bypass all of this? It's a thought, but remember, again, this is what real estate agents do. Represent you to win. Saving money on a buyer's agent's commission in lieu of professional representation can have its serious consequences when it comes to purchase price, concession, repairs, appraisals, negotiations, and so much more. So call me today to find out more. And remember, the seller wants what's best for the seller. Even dual representation by an agent, where both parties are represented by a single agent, so both the buyer and the seller, has its limitations by playing a neutral role between the parties. Having sole professional representation in your corner, in my eyes, is critical to win. Call me today to find out more. If you are looking to make a move within or are looking to relocate from out of state, please feel free to reach out to me. I'm happy to help. And if you want to begin your home search today and search in more real time than websites like Zillow, Realtor.com, and Trulia, please visit www.mpre.homes and sign up for your personalized home search today. Also, download your free relocation guide. This can be found via the link in the description below, or just scan the QR code over to the side. I look forward to hearing from you. All right, sellers, it's your turn. And again, for the last several months, it hasn't been the most advantageous market for you. And it looks like the RE market here in the Treasure Valley is still leading back to more difficult times as mortgage interest rates are high. And again, the buyer's demand is diminishing. But hold on, your competition is also diminishing. With competition diminishing and the gap between inventory and buyer's demand shrinking and starting to intermingle, we should see price stability and gains, possibly. But most importantly, you as a seller will be able to hold your ground against the buyers, meaning negotiations will swing back into your favor. But again, this is all determined by your competition, the other sellers in the market. Right now, sellers may be doing what they normally do during the holiday season, which is taking their homes off the market, only to return them a little later down the road, especially during hot season, which begins in Q2 of 2025. Remember, for whatever reason you may want to sell, which is most likely a lifestyle change, other sellers are still going to want to do the same thing. So expect inventory to come back up. What to pay attention to, though, is should unemployment get out of hand for any reason and the sellers have to sell for financial reasons, this will add to the competition you may face. Unfortunately for you, if you're looking for a lifestyle change, the sellers that have to sell out for financial desperation will exacerbate your competition because they need to sell, meaning they will give up the farm to get out without fear of short sale, which can hurt your equity if they live in the same neighborhood. So again, this will all come down to how effectively the new administration can tackle economic issues here in the U.S. If unemployment were to rise due to an upcoming recession and a correction or a crash to the stock market, unemployment could become a real issue for you, especially if you have the means to stay in your home. But here is my best advice to sellers right now, especially if you're maintaining a 2 to 4% interest rate and have a good recession-proof job. Well, that advice is don't sell. I know you want to make the move because your family did, or you want to upgrade or downgrade your home. You must remember that your mortgage currently is the asset, and banks hate that you have a low mortgage interest rate because they're most likely losing money on your mortgage. And why? It's because the federal funds rate is higher than your mortgage. So your mortgage is a huge asset. And when all the talk of recession finally comes to light and the stock market corrects, hang on until you can't hang on anymore. Remember, your chances of getting that rate again anytime soon is 0. So the choice is up to you, but don't react irrationally to any upcoming panic caused by the news unless you financially have to do so. And remember, like 2008, if you find yourself underwater, short sale your home. The worst thing that could happen is a hit to your credit score. The bank will suffer more than you. Or they may try to renegotiate with you this time because bailouts are now illegal. So we'll have to see if the worst comes to worse. So sellers, though, I'm addressing this as if the absolute worst is going to hit. But looking at today's data, the good news is we did get new leadership in the U.S. and none of this is here. And we have also witnessed the excitement by such of the new administration by bolstering consumer confidence in the U.S. This is great news for sellers. Current media reports are also showing that economic policies in the U.S. could change and even quicker than we think. Although realistically a rapid change is unlikely, the change in leadership is obviously good news for the U.S. economy and much needed help for the Fed. It could also help stave off the possible blow of a recession or lighten the blow of one should one arise. The Fed may also come in for a soft landing. Don't discount that. This is all good news when it comes to your property values. If a recession were to come, will it be like a 2008? Absolutely not. Inventory levels are nowhere near '08 levels, as are delinquency rates to mortgages or new foreclosure filings. So if you're worried that your property value is going to bomb like it did in '08, I can almost assure you that it won't. That would take an astronomical rise in unemployment to do that. But there is one thing to keep your eye on that could hurt unemployment numbers, and that is the stock market. The PE ratios of all 3 major indexes are elevated, signaling a needed correction. And if companies were to lose a lot of money in the stock market, they'd take it out on their employment numbers. Also, where are the unemployment numbers right now, really? If you pay attention to the markets like I do, we have all had that inkling that national economic data has been more or less distorted for the last 2 years, especially when it comes to unemployment. Regardless of where unemployment may be currently, the cracks in those data numbers have shown themselves. We saw this by the stock market reaction to unemployment ticking up 0.2% in one of those reports. In my honest opinion, this gave response time to the problem to the new administration to fix it. As long as unemployment doesn't get out of control due to the Fed's monetary policies and the stock market doesn't take a huge correction or crash, buyers will come out of the woodworks. This is great news for you. Also, we should still expect inventory to come down as per seasonal swings, meaning less competition. And as long as the gap narrows between supply and demand, we should also see a stop to your equity bleeding. If you want to maximize the value you can get from your home, selling now as compared to later may be the right move, all amidst the lingering uncertainty, and a move that is evident by the current inventory levels. So if you agree with me and like to know how much your home may be worth in today's market, please visit my website, click on the Home Evaluation tab in the upper right-hand corner, and obtain it. You most likely will hear from me, but again, I pride myself on being a non-pressure real estate agent. If at all, I'd simply like to introduce myself on the phone call and let you know how I can be of service when you're ready. I can also set you up with monthly market reports, keeping you in tune with what's happening in your local area. And if you are ready and would like to know how much you can sell your home in the quickest amount of time possible and for the most money in today's market, please feel free to reach out to me. I'd love to set up a 30-minute appointment with you where we can discuss these best strategies and get you to your next destination. I look forward to hearing from you. All right, investors, it's your turn. And I'm sure the first thing that comes to mind again is uncertainty. And you'd be right. There is uncertainty. Now even more as Trump will be returning to the White House. What should we expect from this change in leadership? Well, consumer confidence to return, which it did. Heard this before from the last Mikey's monthly market update? You sure did. But guess what? Again, it did. But the other big question is, what is really happening with unemployment in the U.S.? Has the Fed held on for too long? And what about the stock market's PE ratios? Valid questions. But what happened not so long ago? Again, a quick stock market crash that has since recovered. What this did was telegraph to the Fed and the next administration problems that need to be addressed. In response, the Fed has already lowered the federal funds rate, and per predictions, will do twice in 2025. Also, with Trump returning to the White House, American independent energy will return, as well as manufacturing jobs to the U.S., fair tariffs, lower income taxes, etc. While relief will not be immediate, it will come. This should help stave off any large impact caused by a recession, and even reverting back to the PE ratios, it can help because there is no question that the stock market is also overvalued and overbought. However, will there be a large stock market correction or crash? We'll just have to wait and see how it reacts. So talk to your financial advisor today and place yourself in the best position possible. And has the stock market survived corrections before? Well, of course they have. It happened in 1987, 1998, 2000, 2020, and even, believe it or not, in 2008. Some recoveries just prolonged more than others. Now, while I can't predict the results of an upcoming possible correction or its longevity, or even if one will hit, real estate is always a great investment during these cycles. It's because real estate provides a tangible asset with intrinsic value, offering stability compared to the volatility of stocks. Owning investment properties can generate steady rental income, providing financial stability and diversification away from the stock market. Historically, real estate appreciates over the long term and can act as a hedge against inflation, as we can see by this graph. Investors can also leverage real estate to enhance returns, benefit from tax reductions, and take advantage for consistent housing demand. And additionally, real estate often has a lower correlation with stock market performance, which can help mitigate overall investment risk. But the only drawback would be is if unemployment reaches astronomical levels, which I personally do not anticipate. And I mean to the point where Americans couldn't even afford a rental. If unemployment were to do so, however, this would open the door to institutional investors, much like it did in 2009. But don't bank on that. There are little to no subprime mortgages in circulation, and Americans have equity in their homes. There are arms out there, but not at the level amount of an 2007. If either situation created havoc, institutional investors would give you a run for your money anyways. They have more of it, unfortunately, to the tune of $22 trillion. But let's look at it today currently. The mentioned real estate advantages apply, and in a market that is seeing almost 8.01% growth in equity since the beginning of 2023 in Ada and 3.31% in Canyon, real estate could be a good place to park your money to mitigate the risk of a possible stock market correction, especially if you're in it for the long run. And you can make a residual income. Historically, even in recessionary times, real estate increases in value. So if you'd like to know more about the capitalization rates you can obtain on a property here in the Treasure Valley, please feel free to reach out to me today. More than happy to discuss a potential investment property with you. All right, and lastly, renters, it's your turn. And as I say every single Mikey's monthly market update, you are paying a 100% mortgage interest rate. And why is that? It's because you're paying your landlord for their equity. Now, of course, that can be changed. So I do invite you to go ahead and go back to the buyer section of this video so that way you can be in tune with the best strategies. But also, if you are looking to begin to set that foundation today, talking with an awesome loan officer is the first step to set the foundation. So if you'd like a referral over to one of the great loan officers here in the Treasure Valley, please feel free to reach out to me. Happy to place you in touch with one so you can start building today. But I also look forward to hearing from you. So if you have any further questions, please feel free to reach out to me. Or if you're looking to make that move in from out of state, please feel free to click in my description below, download my free relocation guide, or just scan your phone on the QR code next to me. So I look forward to hearing from you renters. All right, and thank you very much as always. everybody, for taking the time out of your day to watch these usually incredibly long videos. If you do have any further questions, or you are looking to begin a purchase, relocation, or you're looking to sell or invest right here in the greater Boise, Idaho area, better known as the Treasure Valley, please feel free to reach out to me today. Also, if you'd like to stay in tune with these videos and you want to keep in touch with what's happening in our area, please click on the subscribe button below, hit the notification bell so that you're constantly in tune with the videos that I do come up with. And again, if you want a resource, if you are looking in from moving out of state right here to our area, please click in the description below, download my free relocation guide, or scan the QR code right next to me. Also, before you go, if you did like this information, please give me a thumbs up, or please feel free to share it with somebody that may find this information useful. And again, I look forward to the day that we speak. Until then, God bless. Thank you so much, and I look forward to the day that I call you my neighbor.